Alrighty, so I haven't done a podcast in quite a while, but it's not really a podcast today. It's an interview and an opportunity for those of you that are going to watch to learn something, get some updates from Transamerica, and get some care or product breaking news that maybe you've heard of or maybe you haven't heard of, and some of the new products that Transamerica is bringing to market. So about, I'd say 6, 9, 12 months ago, I had Steve Weber on the channel, and he introduced FE Express, took the market by storm, helped a lot of folks in the face-to-face side really bring out a product that they didn't have before, but the phone process just wasn't there. And they knew it, we knew it, and it didn't really go very far on the phone. But recently they added a text-to-sign option that Steve's going to start off by discussing with today. And today, over the course of the next maybe hour or less, you're going to hear both text-to-sign, new product information, and why you need to give Transamerica a look again if you haven't in quite a while. So, Steve, introduce yourself to whoever is going to watch today, tomorrow, or 10 years from now. And then let's talk about some updates with FE Express.
Yeah, Chris, thank you. Thanks for having me. So, quick introduction, Steven Weber, National Sales Manager of the Life Insurance Brokerage Channel here at Transamerica. A lot of people ask how long I've been in the business, and they're usually surprised when I tell them I've, 27 years, but not in the business. I'm in my 27th year at Transamerica. So you can imagine the changes I've been through, the things I've seen when we've had, the IT company, the number one company everywhere to, 3 or 5 years ago, we certainly, 2 to 5 years ago, we certainly had some challenging times, but man, are we in a sweet spot right now. It really started about 3 years ago with our leadership saying, being committed to the life insurance space, coming out very publicly on Capital Markets Day to our investors and our clients saying, we want to be Middle America's leading life insurance company. I think another way to say that is that we want to be the number one instant decision life insurance company to really partner with the middle market. It started with our FE Express final expense product. And you're right, Chris, we're having really strong sales. The strong sales started with those agencies that are face-to-face because of the signature process. The signature process face-to-face was as easy as turn the computer around and have them click. But it was, let's say, challenging, clunky telesale signature process. And thank goodness we made an update in the middle of August. So it used to be client received a text, typed in their email address, typed in an 11-digit password, typed in their social security number, typed in their birthday, checked a couple boxes, and then signed. I almost had a fit when I first saw this telesale signature. And a lot of people said, hey, we love the product. Man, your product, the process, the underwriting, the funeral planning concierge, people really like the product. But those that were mostly telesales were hesitant at least, to really embrace it. And that absolutely changed. Just in September sales over August are up 43%. So really strong September. And it's due to what you just mentioned, Chris, having an easier telesale signature process. Final expense agents, to oversimplify, I think as I've talked to them, it kind of comes down to looking for 4 things from a carrier, right? They want a really good EAP. They want a product with strong underwriting. If you have the best EAP in the world, but you're declining clients and not protecting families, your EAP doesn't mean much. They want value in a product, and value for us is more than just your rates, right? Sometimes it's the underwriting rules. Sometimes it's the funeral planning. So there's a lot of value in the FE Express product. And then that 4th thing is what I just touched on. You really need a good telesale signature process. Since COVID, since 2022, I guess, and man, what a big shift to this industry. I had another leader in the industry say that this industry is brand new because of the way you can recruit agents that weren't going to be comfortable going face-to-face or door-to-door. And you can build a team now of agents that are a lot more comfortable staying at home, on their phone, on their computers. And now with the great product like FE Express, it's really taken off. We're having our best final expense sales ever. And as a company, we're having our best life insurance sales since 2014. So really strong right now. But Chris, we've talked a little bit, and I could tell you, you have any questions about FE Express and what our strengths are? Or do you want me to talk more about IUL Express?
Before we do that, I have a question that I think is going to segue perfectly into the IUL Express product that we're going to talk about. In the midst of the telesales boom, I think carriers were faced with a lot of challenges on quality, a lot of challenges on compliance, and making sure that what's being issued is legal, valid, and stays on the books long enough for you guys to make a penny, which doesn't happen for years. Is there anything you can share just from a quality and compliance perspective, or a view that agents
Yeah.
don't have from the field, and how important that is to a
Yeah.
carrier?
Oh, that's a great question, Chris, because a lot of people also think they love our underwriting decisioning, right? What's unique to us also is that you're getting that underwriting decision at the beginning of the e-app. It's almost too easy, right? Your client is getting you're the agent typing in your name and address info, then you're doing your health conditions and lifestyle questions, and then we're asking you to sign. So we're asking you to sign via that 6-digit text PIN in order to give you that underwriting decision. Well, our underwriting rules are so good right now that a lot of people are trying to rewrite their gradeds or rewrite declines, and we are still declining people. This is not a guaranteed issue product. You know, when agents find out that you can get day one coverage select for COPD, for diabetes with neuropathy and uncontrolled insulin, for congestive heart failure, for a recent heart attack or stroke, I mean, our underwriting rules are really, really strong. But people don't realize that when you're getting that first underwriting decision, that's a submit. That counts towards placement and eventually persistency. But so we're definitely watching people's placement. Don't just take all your declines and try to get them approved. Chances are they're going to be declined. But if your client is signing, it counts as a submit, because some people will say, wait a minute, I haven't submitted that policy. Well, we had to go through the underwriting. We used our fast data sources. As a carrier, there's always going to be costs and charges and expenses from the carrier's point of view. That's why we watch placement and, probably more importantly, like you said, persistency. I think it's pretty well known most insurance companies aren't making profits off of final expense until around year 7. And that's a long time. We have to find a way to keep these policies on the books. For us, that means really strong underwriting and a lot of value.
Absolutely. So as you're getting the slides up to kind of go through the new IUL Express product with us, I think it's also, from what I still know to be the case, it's a one and done application with Express. They can't buy another one. They can't be written next month or 6 months later. The one app and done is still how that's set up too, right?
Well, good news. We have a lot of changes coming also on October 16th. So even for FE Express, you can have multiple policies. So right now, you can only have one policy. And when something was a mistake, you know, there was a little too rigid of a process built around anti-fraud. You started to mention that. Like, what are the things that companies do? There is a lot of anti-fraud built into the technology behind these products. We're validating the client. We're validating bank accounts. We're validating their phone number for the PIN to sign process. Sometimes that adds a little friction when a client's on a new phone, or the phone may not be in their name for that long, or, you know, they're using a temporary phone. You know, we're trying to validate that, and sometimes it doesn't go through. But we are trying to change our rules to make sure more and more people are eligible to sign. There has been some friction with people's phone numbers not being recognized. Yeah, let me start clicking here a few times and pull up. Oops, no. That was leave. Let's stay in studio.
I think agents need to know it's important that compliance is there to protect us as much as it is to protect the carrier and the client. And sometimes stuff just doesn't work, and that's okay. It's not the end of the world. Pivot to a different product, but compliance is there to protect everybody, and they're watching. So don't think you cutting corners to something they're not going to catch.
Yeah, so that's very true, and it is about protecting. Especially, you know, you're building a big agency, Chris. You want to have, you don't want bad apples coming in, and I'm sure you've experienced chargebacks that were just purely fraud. And we're trying to be a better partner and make sure that doesn't happen.
Absolutely.
How are you seeing my screen?
Yep.
Okay. So for a lot of you, this should look familiar. This is when you go to secure.transamerica.com and it takes you to Agent Home. This is the dashboard where you're going to see down here on the left in this box right here. You've probably seen FE Express, but now it's going to say FE Express and FFIUL Express. So when you launch that, and this is a real app, so this takes a little time to load, but I want to show you what it really looks like. So you have your dashboard for all your past policies. You can, if you want to go right into your health conditions, if your first concern is seeing if your client's going to get approved, start with new application. I want to start with Get Quote. This is really to understand the product and understand, the illustration system, see how competitive we are. So right off the bat, it defaults to FE Express, but you're going to click on it and now you pick your product. So if you're used to writing FE Express, you're going to love this same technology and e-app. Let's just do some numbers that I have that I know look good. Did I type that as a 1970? Nope. Missed something here. 1975. And let's say we're in Texas. And let's just go. So there's only going to be 3 automatic decisions here. You're either going to be approved, select non-tobacco, select tobacco, or declined. But remember, this is the illustration. So on your left-hand side, this is all your input. This is all you need. This is 100% of what you can customize. On the right-hand side is the output and all your values. There's 3 one-click easy solves. Probably the most popular when you think of an easy solve is this maximize protection. This is going to be what's the minimum premium to endow. And if you look at insurance toolkits, this is what you're going to run. This is what they're going to see is this premium. And I'll show you a couple screenshots, Chris, that you might find familiar. So maximize protection, but there's 3 easy solves. So every time you click, notice the right-hand side. It's automatically going to update. So now for a 50-year-old at 250 grand, your monthly premium's 287. By the way, that's really competitive versus Americo, Mutual of Omaha, National Life, American Amicable. We're going to have some really competitive premiums here.
What's the minimum? What's the minimum face amount?
Yeah, it's 50,000 to 500,000, and it's 500,000 up to age 60, and 61 to 70 is 300,000.
But the minimum.
I did go right into the e-app, didn't I? I skipped the deck completely and went right into the e-app. I got too excited.
That's okay. That's okay.
Yeah.
The minimum is always 50, which is good.
The minimum is 50. I'll show you. I'll tell you competitively, we look a lot better once you get to 100 grand. We're even more competitive at 250. The sweet spot seems to be 45 and older. When you run those insurance toolkit quotes, you'll see like at 35, we're just okay. 40, we're okay. 45 and older, we start looking better. 100 grand and older, we look really good. If you're doing 50 grand, we look good if you short pay. Like if you want a 10 pay, 20 pay, 7 pay. So you have these 3 different easy solves, but you also have advanced options to fully customize for any client's need. So remember, you click and it updates. So 287 minimum premium. Let's say they can overfund a little bit and they want to build that tax-free bucket of income and use it someday, or they want to have it set on for income. Well, if you can fund more, maybe Target solve. Target is 100% commissionable, right? So 472 a month. And our targets, if you can overfund it all, our targets look really, really good. They're on average 30 to 50% more than some of those other IUL Express carriers that we talked about. So definitely, if you could overfund, definitely look at this target solve. You can solve for premium or face amount. You can just customize your death benefit just right here on the slider bar. Every time you update something on the left, the right-hand side automatically updates. Let's go back to 250 here. Yeah.
Now, I think I know the answer to this, but I know someone's thinking this when they're watching. Is the reason that this product doesn't go down to 25,000 like some of the competition is that you don't want it cross competing with Express, or is that just actuarially how they wanted it?
Probably a little bit of both. we want to win final expense where final expense is designed to be.
Mhm.
It's a little bit of our price points, the different rates we use. You can do it at 50 grand, but if you run quotes, you'll see we're going to be expensive compared to other carriers at 50 grand. At 100 grand, we look really good. Actually, I'll show you some on one of your slides that I've put together. So
Perfect.
3 easy solves, which I love, right? And it gives you a hint: target solve, quickest way to configure a policy for the majority of clients' needs. Just saying overfunded a little bit, maximize protection. This is your easy solve. Maximize, really trying to put in as much premium as possible to maximize cash values. Different solves. Let's look at the advanced options though, because a lot of the IUL Expresses that are out there don't give you the ability to really customize this to your client's need. So advanced options, you can customize. You can say how long, are you paying monthly or annually? Okay. How long do you want to pay? Do you want to pay to 65, or do you want to put in a specific year? In this example, I want to show you age 95, because I want to show you something that's pretty interesting that we do that I don't think any other carriers do. Do you want to illustrate income? Well, when do you want it to start and for how long? And then the death benefit. This, if you're coming from the final expense space, you might say, oh, graded. I don't want graded. This is not graded like final expense, like a lot of people think. There are 4 different death benefit options depending upon if you're taking income or not, but level is level, right? Part type 2 or B is increasing. Graded is a combination of both. Graded's really, really cool. It's an increasing death benefit to age 70 that slowly decreases the core death benefit through age 90. And it's a way to really manage those COIs in retirement. And I'm going to show you graded here. So let's save these changes, but let's keep looking over here at these other advanced options. Let's talk about our premium allocation. We have 5 different indexes that you can invest in, right? So not just the basic S&P 500. The global account is really strong. Balanced uncapped index might be the best. Is an absolute. It's an incredible index. How do you learn more? Well, click on learn more. So what is this index? It's a balance of 3 different funds: the S&P 500, the Fidelity mid cap, and the Nikkei 225. So right off the bat, you know that you're going to get at least 66% equity, 67% equity on an uncapped index. So this index is completely uncapped. Now, the first thing you should ask yourself when you're learning about an uncapped index is it all volatility control fund? And the second question is, what did it actually do in 2024 and 2023? Because volatility control funds got killed. The back testing might have looked great, but the actual performance of most volatility control uncapped indexes really didn't do well. So here you've got a minimum floor of 75 basis points. It has a 113% participation rate, and it's completely uncapped. So how is it done? We'll just click on the historical performance, and we're going to show you its actual performance for every year. So in 2024, right, it did 19.3%, right, uncapped. You can see way over here, it would have done 33%, 15%. I say it's a real index because it's based on 3 real indexes: the S&P 500, the Nikkei, the Fidelity small mid, which have all been around for a long time. So really strong performance. And when 2022, when it was negative, you still had a guarantee of 75 basis points. But when you look at these returns, it's almost 11% over a 20-year period. So What does it say? 10.68, 10.87 over the last 20 years. And you're not going to get burned being in bonds with the volatility control fund. So I really like this index. I think it's really driving a lot of sales. I want to show you this though. What if you want a lower cap? Let's look at this basic S&P 500. So we're going to put 100% in the basic S&P 500. We're going to check. Notice this bar tells you you're over allocated here. So let's change this to 0. Kind of shows you where you are. The basic S&P 500 doesn't have any type of monthly fee. It doesn't have this IAMC, index account monthly charge. And it has a lower illustration rate. But These are all designed to illustrate the same, but I want to show you something specifically. So one of the things to know is that when we're giving you a decision, right, it's just like the FE Express. At the beginning of the e-app, you're getting a decision. You can still customize it after the decision, but that decision, it's a full decision in the e-app. You're approved. You know exactly what your rates are. You don't have to wait for an email. You don't have to find out tomorrow if your living benefits were included. There's no, Select plus Select Express. It looks really, really strong. So let's look at the right side. If you want to look a little closer, that you can play with this chart, and let me expand this. So I think my screen, this should be full page, but to notice here, every time you go on a decade, it's going to summarize all your different values. You can also click here on this little icon, and it's going to show you your values also. But what I really like is the fact within 5 to 7 seconds, you can customize this with the client's name. But within 5 to 7 seconds, you're going to get the full illustration with all of your client's details for this application, for this policy. And it is a really good looking illustration that is a sales presentation. So it talks about life insurance and tax-free growth and your living benefits. It gives you a summary of all of your living benefits, which are built in for free, by the way: terminal, chronic, critical. It's going to talk about how IULs work. It's going to talk about the indexes. And down here, it tells you the different caps and floors. So global index has a 13% cap. S&P has a 12%. The basic S&P, which I illustrated, has a 9% cap, but doesn't have this charge each month. And I'll show this to you in a minute. It also has a max illustrated rate of 6.5. So let me show you a couple things that are neat with us.
I just think it's fascinating. We went from the 15-page application with 19 signatures that never made it through the fax machine 10 years ago to such really high quality technology that's also easy to digest, like visually. Like some of the IUL products out there, maybe I'm not that smart of a person, but I look at the thing, I'm like, I can't understand this. This is really, user-friendly, agent-friendly, and a massive step forward from where I began writing Transamerica. I think I might have lost you there on the audio. As they would say in court, we're back on the record. Minor technical difficulties, but StreamYard has a pause button, so everything is okay. We're at the point now where Steve's going to go over what the illustration looks like on the new Express IUL product that is going to be available on the very same platform that you're used to for Final Expense Express. So Steve, back to you.
Yeah, we're just walking through when we clicked on download illustration. Took about 5 seconds, and it opened up right here. And like I was saying, a really good looking illustration. This is all embedded in the e-app. So you don't have to get a signature. You don't have to rerun it. When you do your easy solves or you customize and you start the application, it's all embedded. So you don't have to go submit it. It's really going to be a smooth process. I was going to point out something pretty unique here. So in this example, we're overfunding. Remember, we said you could get this 50-year-old $250,000. It was $268 a month. But what if you can overfund a little bit? What if they want to build that cash value and they want, have this bucket of tax-free income? Well, we ran this at a target funded premium. And then we also ran this at graded. So I want to show you a couple things. One, let's just take a look at our targets. If you were to put in 5668 down there on the bottom right, it's going to tell you what your target premium is. Of course, your target premium is 100% commissionable. By the way, those target premiums look really strong. They're 30 to 50% higher than a lot of other carriers when overfunding. So a couple other things we did. This is not graded like Final Expense, where you don't get your benefit for the first 2 years. What this is it's an automated increasing death benefit that switches to level from age 70 to 90. So let me show you a little bit more on this graded death benefit. So your death benefit's 250. Well, let's just pick an easy number. Year 10, your policy value is 50,000. Well, 250 plus 50 equals your death benefit. So this is your typical increasing death benefit. Another example, 7 is your 447. But right around age 70, actually, there's age, right around here, age 71, it starts to change a little bit. It's still growing, but it's not growing by as much because we're slightly reducing that $250,000 death benefit each year. It's just a way to really manage COIs. So here's another question for you, Chris. You may have heard that a lot of policies, especially IULs, people say they're just going to blow up. If you live too long, the COIs are going to become so big that the policy is just a time bomb waiting to happen. Well, let me show you something otherwise, because after all of your numerical numbers, we start to show you all of the expenses. So we really disclose every single different fee and how this actually performs. So with your premium outlay of $56.68, you have a 4% premium charge. You have your cost of insurance, which is really competitive. There is no index account monthly charge because you're in the basic S&P 500. You have your per unit charge. Some call this administrative expenses, but this is basically how commissions get paid and other distribution costs. It lasts for 16 years. Then you have your $10 policy fee. So fully transparent on how this works. Well, let's go down to 95. Remember how we said that you're going to stop paying your premium in this example, age 95? Well, look what happens here. Not only does your premium stop, your 4% premium stops, but how your COI also stops, because we're one of the few carriers that when this illustration, when your policy is performing well, as early as age 96, we're going to let this policy endow. So you don't have to wait till 120, right? Your policy value equals your cash value equals your death benefit. Well, when your policy value equals your death benefit, there are no COIs. So look what happens down here. You stop paying your premium because we illustrate it that way, because even though you have 3 different easy solves, you can fully customize this for your client. Your COI stop. There is no IMC. You're getting, look at this year, like 100. You have $1 million and you're paying less than an S&P 500 Vanguard fund, less than a Fidelity, less than, Schwab. Your fees this is the most efficient investment and tax-free transfer vehicle available. Wow. A lot of people are surprised. Like, what do you mean you have no COIs at older ages? So I just wanted to point that out because I do think that's pretty unique. Most IUL Expresses will keep you in corridor up to age 120, so you're always going to have COIs. Here's a way to say that, and by the way, look at this. With a fee of $120, your minimum earnings is 75 basis point floor. So you're earning almost, in this example, $6,500 a year guaranteed, because you have a 75 basis point floor. So no matter what the market does, you're earning, your only fees are 120, yet we're guaranteeing you 75 basis points. So just want to point that out because that's pretty unique. Let's come back to the illustration. All right, we talked about the 3 different easy solves, how you can customize by face amount, how you can use the slider bar, how we have advanced options to fully customize for your clients. We talked about the quick glance of way to look at all your policy values, the fully downloadable illustration. So let me pivot. When you're ready to start the application, you just click Start Application. Now, this is a real app. This is a real site. So I don't want to start a real application. But let me show you a training module that you have access to. So I'm going to make sure I put this in the link because everybody has access to this IUL demo site. It's just a way to practice and get really familiar with how this works. So we already went through the get quote, right? These are all your policies that you've written. These are, some have been scheduled, but, we went through the illustration. Let's talk about the application. So it looks just like FE Express. Oh, I can't do it here. I got to do it this way because this is like a canned demo that It's a canned demo site that pre-populates everything. This is what we just went through, but let's go with the start application down here. So this should look familiar. It starts off with your licensing, right? Then it goes into how are you dealing with your client? Are you face-to-face? Well, let's say you're over the phone. In this demo, it puts in all you're going to put in your client's information, and it takes you right to the health insurance page here. Hopefully, there it is. So now you're starting an application. It kind of summarizes the information we put in. We're saying you want 300 grand. You're ready to start the application. Yes, you do it in person, or you're going to say yes to electronic. In this example, it says you have other life insurance, but you're not doing a replacement. And then it has other questions. Just want to quickly go through what the application looks like. It's on the same platform as FE Express, so very similar look to it. Couple things that are important to note. Has a little longer. Well, let's talk about underwriting. Guys, if you're coming from the final expense world, this is a different world. You have to be healthy, right? Now, you might be able to get down on some health conditions down to table 1, or maybe some health conditions, even table 2. But in general, you should have a standard and above client in order to get approved. So all of these questions up here are knockouts. Doesn't tell you that, but these should look, if you've written life insurance, fully underwritten life insurance, you should know that these are all knockouts. Bedridden, knockout.
Bedridden?
Yeah, bedridden.
They can't be incarcerated and apply remotely.
Right. Yeah, I guess. Yeah. So strict, just like other carriers. Some of these are not knockouts, like cancer. You can have different forms of cancer, depends upon when you had it. Some of these are knockouts. Same thing here. A couple more questions around, are you currently in a wheelchair? Have you spent more than 2 nights in a hospital? Do you have AIDS? These questions really determine, so you can get approved select, but not always get approved for the living benefits. These would affect your approvals for the living benefits, critical, chronic, terminal. And sometimes that'll happen. The good thing, though, is in this app, it tells you don't have to wait for an email. You're usually going to get approved for, if you're approved select, you're going to get approved for your living benefits usually.
Quick question.
Yeah.
I don't know if you know the answer to this, but if they're declined for this, are they able to submit on FE Express, or is it a knockout across the product portfolio?
No, you could even apply for the regular fully underwritten FFIUL. So and we're trying to update this that says, like, there's a difference between a hard decline and a soft decline. A soft decline, we're going to update the screen to show you that, hey, you might, you're not approved for this process, but you might get approved for the fully underwritten IUL or the final expense. Listen, those final expense rules, COPD, diabetes, congestive heart failure, recent heart attack, stroke, all of those are approved day 1 for final expense. All of those are declined for IUL. It's a balancing act. If you make your underwriting too easy for an IUL, you really affect your performance and your rates and your competitiveness. So let's just keep going here real quick. There are a few more questions because of IUL than you've seen in final expense. Questions about your income, maybe your your net worth, some more lifestyle questions. But then this should look familiar, right? It's also a 6-digit PIN. So your client's going to get a text. You're going to say, yes, they agree to receiving this text message. You can review all their documents here. You're going to read on the script. All the client's going to do is read you that 6 digits over the phone. You're going to type in the code right there, and that's their signature. So now you're going to update any commissions. You're going to update some questions around how long you've known the client. You're, as the agent, going to sign. And we're giving you this underwriting decision, just like FE Express. So notice it changes. You're approved, select non-tobacco, and you're approved. Well, you can still fully customize this illustration. Maybe they go, wow, I can't believe I'm approved select. Let's get 500 grand. So all you're going to do is, one more time, lock in what illustration you want, your premiums, your death benefits, your funding strategy. You're going to confirm your coverage, and then it takes you to your banking information, a couple more questions. automatic, just other questions here. This demo site kind of makes you click on a bunch of them. Let's see. And you lock everything in, your beneficiaries, you lock in your banking. Oh, one thing to note, and I do think I am asking for the tech team to work on this. Your first draft date is always immediately. You can customize your follow-up draft dates, right? Your recurring draft dates you can customize. Okay. So if you click edit here, you can pick what day. I think in this example, we picked the 5th day of the month. But I am hearing feedback that agents and clients want to be able to customize the first day. Right now, you can't. Right now, it's always going to be basically tomorrow, or as soon as they get able to get that money out. Now that you've locked everything in, you've updated your banking, you're doing your beneficiaries, the client you're going to click to sign because you're sitting at your computer. Your client gets that text message one more time. They're going to read you that 6-digit PIN after you read the script summarizing what they have. You're going to type in their 6-digit PIN and you're done. There's no outstanding requirements. There's no illustrations that need to be attached. There's no, so everything is fully embedded into this e-app and system. Let me show you one more thing, Chris.
Very impressive.
Tell me if this looks familiar. This guy. Let me put this in presentation mode. All right. Chris, hope you don't mind me leveraging some of the fantastic tools from insurance toolkits. Right. Mm-hmm. So here we're looking at a simplified quote for American Amicable. You're looking at $100,000, $250,000, and $500,000, and for an age 50-year-old. Now, right now, Transamerica is not on here yet. We're working hard to get the right rates, those minimum premium to endow rates, basically the max protection. So how would we look? How do we look competitively? Well, at $100,000, you could see we're not 140, we're going to be 123. At 250, we're pretty substantial difference now. Wow. For 250,000. At 500,000, that difference gets a little bigger, a little larger. So that's American Amicable. Let's look at Mutual of Omaha. 135, we're same rates. 123 for 100,000. 286 for versus 327. Wow. And then there is no 500,000 option at that age. So still looking pretty good there. And then let's look at Americo. 122 ballpark, we're right there at 123. Once you get to 250 and older, I'd say we start looking better. We're at 286, and then they don't have a $500,000 option here. So that's age 40. That's age 50. The sweet spot seems to be 100,000 and above, and 45 or 50 and above, all the way 50, 55, 60. The older you are, the better we look. Here's a 40-year-old example. We're in the ballpark here, but not as competitive, right? Not winning by such a big gap that you just saw at age 50. 71 or 73. Once you get to 250, 177, we're 159. 355, we're 308. But younger ages, we're doing okay. Right, here's who we have, Mutual of Omaha. 67, we're a little bit more expensive at 73. Once you get to 250, we're right in there. At 500, there's no pricing there. Same thing, America looks really good at younger ages. We're right there at 159. So just to go back, our sweet spot is definitely 45, 50 years old, 100,000 and more. And I would say not the policy. We go down to as low as 50,000. Just not super competitive. I think, like you said, Chris, we want, if you're writing final expense, write final expense. And if you're gonna, if you want an IUL, then we're trying to give you a really, really strong IUL, especially once you get to 250,000. At 250,000, also, so all the living benefits are included at all face amounts, but the funeral planning concierge rider, the Everest funeral planning concierge rider, is built in at 250. So
Okay.
one little quick note to know.
Interesting.
If I was
Any
to
other
show you,
riders for children, grandchildren, accidental, optional riders you can
oh,
add?
very good point, because we have another change coming. Let me show you. I'm jumping around a little bit here. Let me just go to this page real quick. I probably should have started with this. Remember, I said I got so excited, I skipped right into the e-app and didn't go over the kind of the highlights. Well, first of all, 100% instant decision. There's no waiting for an email. There's no refer to underwriter. There's no getting your rates or your living benefits the next day. It's all in the app right up front. The 6-digit PIN to sign we talked about. Here's your face amounts. 18 to 60 is 500 grand. 61 to 70 is 300,000. So still real strong face amounts. 3 easy solves, right? Not just the one max price. You can also target solve and you can maximize cash value. Your 3 living benefits are built in. They do have to be underwritten. So usually you're going to approve for all of them. The 2 Everest at 250,000, and then the 5 different index account options. You could tell from earlier how much I really like that balanced uncapped strategy. Anytime you can get an uncapped index with as high as 70, with a historical 76% equity, you don't have to worry about getting burned in a volatility control fund that moved you 100% bonds. That's why you're seeing some carriers being sued for 2024 and 2023, because they end up in bonds when the market just did really, really well. What else should I tell you, Chris?
I just think it's fascinating to see you guys step into this space and really understand the competition and then look to outclass them in the process of building a product that is going to be sustainable. There's nothing more bothersome to a long-time agent than to see a product come on the market and then go off the market. And you're like, well, so much for that. So it looks like this was really built to know the market and then to compete very strongly in it. Anything else on the Express you'd like to share? I got a few wrap-up questions at the end.
Let me stop sharing here. I think this is the button. It's stop screen. Probably. Yeah, come back to you. Juvenile rates you asked about. So mid-November, we're going to go down to issue age 0.
Okay.
So right now it's 18 to 70. You just saw the face amounts. But juvenile rates come out. We write a ton of juvenile policies on the core FFIUL product, the fully underwritten. So now you're going to have 100% instant decision with those same exact COIs, right? It is going to be a really strong competitive juvenile product with rates too. And then we have other changes. So that this IUL we're talking about goes live October 16th. We have other changes coming. The ability to have a third-party payer. That's coming to FE Express. The ability to have multiple policies. That's coming to FE Express. The ability to change your draft date. That's coming to FE Express on October 16th too. So yeah, this is a space. The next big product, you're going to have a full suite of instant decision products. So we started with FE Express on the 16th. We launched IUL Express. And then next year, mid to second half of the year, 100% instant decision term with living benefits. That's looking really good also.
That was my next question. I'd imagine term had to be on that list, and it will be hopefully some point next year. Let's wrap up with the question that is worth waiting to the end to hear all about. Is maybe you can answer it, maybe you can't, but I think with your experience in the industry, you'll have some good insights on it. What are some mistakes that agents make that cost them their contract? Like maybe someone doesn't like Transamerica. Maybe someone's angry at them, but maybe one day Transamerica comes out with products like this that really change the space, and then they regret that they don't have them. What are some mistakes you've seen agents make that have cost them their contracts?
I mean, the first one you don't get a second chance for is just pure fraud. Sometimes it's real fraud where you're just stealing money. You're done. But we're also very strict with our signature process. Don't say you're face-to-face if you're not. Some people would say, and we've terminated agents because, my client said I have permission to sign on their behalf, and so I signed this as I just clicked because I had their permission. No, you're terminated. Don't jeopardize that. Then there's things like health conditions. Don't clean sheet. Be as honest and thorough as you can. Now we know clients don't always disclose everything, but but there are certain things. We've had people in wheelchairs with no legs, and you were face to face, yet you didn't disclose that there's things like that that just are common sense. We do watch persistency and placement. We don't have, a financial bonuses tied to it right now. I think next year we're going to pay more attention. We have some people, they just practice on the e-app, and as a carrier, it costs every carrier money to make an underwriting decision.
Yeah.
There's third-party data, there's tech partners involved. So we are watching placement also. Make sure then you get down to affordability. Don't press, back off affordability. We let you customize. What's interesting, even for final expense, about half the people that customize their coverage increase their premium, but half decrease it. They want to find something for this demographic that's affordable. And I would say that for most agents, it's not about fraud and being dishonest. It's probably not overselling and making sure your client has something that's affordable that they can keep on the books.
Absolutely. I know you've had this in other slide decks before, but maybe just speak to the claims paying power and the financial power that Transamerica has, where the billions of dollars and paid and in force, so people have confidence in what you guys have here.
Yeah, I just added that slide to one of our decks because I think it does tell a great story. The size of Transamerica, the fact your clients already know Transamerica. It's one of the best well-known brands in the financial services industry. The Transamerica Pyramid is the most famous building, west of New York. The most photographed building, actually, I think is a direct quote. And then, assets wise, we pay out more in claims and benefits than most insurance companies have. We're just a giant company that does mutual funds and does annuities and does life insurance and does pensions and does 401ks. And there's a lot of strength and stability that comes with that, especially in the final expense space where you've seen some carriers have gotten out. We're fully committed. We're bringing more product and making more enhancements to FE, to IULs, and soon to term for this instant decisions.
Absolutely. Any closing thoughts on immediate solutions? Do you see that being sunset? Can you speak to it? Will it end up on the platform? Where does immediate solutions stand in the future?
Sure. I've been very close working with our product team saying we need immediate solution today. It's driving a lot of sales. Well, it's driving a lot of sales because some agents really like the preferred rates that aren't available within immediate solution. There's some other features, but it's probably the preferred rates. So I have a commitment that we're not going to pull immediate solution until we have preferred rates on FE Express. And I wouldn't be surprised if sometime next year you see two things. You see FE Express with preferred rates, and you see a substantially higher maximum face amount also. So those are two things coming to FE Express that have me excited for next year.
Absolutely. If you haven't taken anything away from today's conversation, you weren't listening, and that's okay. But there was so much that Steve shared out of the goodness of what Transamerica brings to our market that hopefully you wrote that down and you're ready to write it as soon as you find the right fits. Subscribe, like, comment, interact with the content wherever you catch it, because this is the kind of stuff that will make you better and will make you more money and will help your clients in the future. So interact with the content wherever you catch us. Steve, thanks for joining me today.
Awesome, Chris. Appreciate it. Thank you.